Alright, late week news part 2. So framing off of the week where we had Monday's range. We saw that we poked above Monday's range and then slid through some earnings. Following day, Wednesday, it was a bearish day all throughout, so now we're framing up Thursday for that late news on GDP. So here we have the standard deviations off of Monday's range, which was set in the projection, this green box, right around that 2 to 3 standard deviation. So we're at 1 to 2 standard deviation. And we also have the previous day's high and low, and we're watching what the GDP news does here on Thursday. We already have the framing from Wednesday's high and low that we've got premium, equilibrium, and discount levels, so the low, middle, and high. And we're watching how price reacts around that. So here's that news event 8:30 that we're going to track, and there's no other news event, but we're noting G20 meetings. So 5-minute time frame, dotted line purple is previous day's low, yellow is the midpoint. GDP news kicks off. We have a huge Judah swing through 9:30, equities open, and we're watching that movement, saying, okay, what's happening? If that movement down, which stays below 9:30, were to continue, then we would be respecting these fair value gaps as it gets back to premium. But instead, what we see is price pushes back up, respects or shows sensitivity to the previous day's low. So that is where we would be confirmed that this is a bullish AM session. Even before it makes that swing high, breaks that swing high, even before it clears above 9:30. Once we get out of the range, back into a range, something like basic range, time-based range theory, time-based range principles, oh no catchphrases here, where the low gets revisited, and then we're aiming towards something up in premium, meaning above equilibrium. Now we can see the intraday profile starting to take shape, so this AM bullish run is easy to define. We don't know yet what a PM does, but we'll see how the PM turns into a PM reversal in a second. So framing out the two sessions, AM session, lunch, PM session, we can see that we have a lunch range that gets pierced, and then we start to make this bullish move down. And then the question is always, how do you get in and where is it going? So we're going to use that lunch range to frame it. The lunch range high, lunch range low, we see that peak above the range. Just like if you were to imagine like a Tuesday high, this is like a peak above the range, and we are only using this as a high to go lower when we see price break certain discount levels. So the smart money reversal goes in. Whether or not you traded or how to trade that is a totally irrelevant question, because that just comes with study and how you want to enter in terms of price pattern. But let's just consider that when do we know we are bearish? Well, we know we've got this time-based range with lunch. See the equilibrium level right through here get tested, revisited, low gets broken, tested, rejected, touches it one more time, confirmed to be bearish, coming back to the range. So we're looking for PD arrays inside of this range. And we can see that we've got relative equal highs, a small fair value gap, price pierces that, and then inside here, second stage distribution is where we could say, okay, this is where if we see some sort of revisit to a premium or some sort of 2022 model, that's where I would want to be going, aiming for the sell side if we can get it. That's what this profile calls for: a peak above the lunch range high, a peak above the AM high, which is all the way back here in the AM session, and then we start the bearish move down, potential sell in a buy program if the rest of the day was bullish, or continuation of a sell program if the rest of the day was actually bearish. So let's go back here. So let's look at the chart to see what that smart money reversal looks like on a 1 minute, and then we will flow through down to where we would actually be able to trade. So smart money reversal kicks off here as we peak above the lunch high. Because we are back in premium, that yellow dotted line being the area that we're most interested in, because that dictates the premium level of the previous day. When we see small displacements like this dropping back into the high of the range, we would anticipate being able to go short. But that's not the point. You could have been looking at this whole thing as a bullish run, and that may have eluded you, but note it. Next thing is the midpoint of the lunch range. So as we see, as price drops below it, we have sensitivity to this fair value gap around the equilibrium, and certainly as price breaks through it, we'll be looking at that as well. So here is the second stage distribution where we see this consolidation. We're coming back up into the lunch low, so that's this level here. We pierce above it, shift below, and now we're looking at this entire leg up as a manipulation leg, like a Judas swing. So we split the Judas swing, high and low, and we want to be looking at areas in premium to get in, to sell in premium. So inside this premium leg is where we are looking at areas of inversion as price breaks below. We're looking for price to come back to that level. As price breaks or sweeps below order blocks, we're looking for price to come back to that level. So anytime you have this low here, let's say that this entire block was what you're counting as order block, and then price spikes below it, see that price then comes back, draws back up into it to then continue the distribution side. We don't fully get down to the sell side, miss it just by a few ticks, but that would be the completion of the sell side of the curve. All right, we'll do it again.